morning. It is Friday, February 16th. We got a big show. A lot of stuff to go over. We got SMCI. I've got PPI index, how that one affects the markets. New AI videos from OpenAI, the Pelosi trade, her NVIDIA stuff, Shea Boular's strategy. I'm going to go over my entire portfolio and give you my elevator pitch of all of the things in honor of Shea doing what he did, how I use Seeking Alpha Premium, the top movers of the day, breaking down the Mag 7 earnings, Motley Fool pick, ELF. ELF is the Motley Fool pick. Some stock charts. NVIDIA, could it get bigger than Apple? PanW, Palo Alto, up to $400. We'll talk about Lilly moving again. All the earnings that DoorDash sucked, Roku sucked. The trading desk, which should have been obvious with Meta, soared 20%. Coin soared 20%. DraftKings, it's not that great. Probably get to buy it again. Toast cutting their workforce, just huge dividend roundup, and then a bunch of social requests, and finally the scans. But let's go over the biggest news of the day. I released a free newsletter last night, which is my first collaboration with My Weekly Stocks. I was going to make this a paid version. That's how good this is. And it's perfectly timed. Everybody's asking me, when are you selling SMCI? Well, in this newsletter, I go over my strategies for selling stocks. I give you, I think, 5 tips on when to sell stocks. And then My Weekly Stock, he gives his 5 tips on when to sell stocks. Completely different, no overlap. Very timely. We're at all-time highs. It's a perfect newsletter for you to get. How do you get it? You can go to dailystockpick.substack.com or you can go to my link tree. It's down below. It's in this video. If you're watching on YouTube, if you're watching on Spotify, linktr.ee/dailystockpick. It is on the screen for you. And the links are all down below. But the newsletter is the 5th one down right here on the link tree. So you can sign up. It's free. Again, I made this free. 100% free. Will go into the education section, and I will have a paid newsletter this weekend. But this one I made free. My Weekly Stock, he's got it for free on his website as well. myweeklystock.substack.com. But if you're interested, I think it's a really, we took our time. I mean, this took 2-3 weeks to write together. So that's why I was going to make it a paid one, because we really did put in a lot of effort into there. I include things like Exxon, things like Apple, things like Sedge. If you've listened for a while, it's all in there. It's all in there. So it's a real, I'm telling you, it's worthwhile. It's a good newsletter. Let's talk about OpenAI. OpenAI, this was nuts. I mean, this was really crazy, the OpenAI stuff. These videos, and this one from Elon was really funny. Sam Altman, we'd like to show you what Sora can do. Please reply with captions, videos you'd like to see, and we'll start making. But a guy turning a nonprofit, which was OpenAI, source into a company, into a profit-making closed source company. That's what OpenAI is turned into, but unbelievable. If you don't know it, just go and look this stuff up. So PPI came in. This is the producer price index. If you remember Tuesday, we got killed. The market got taken down. I said, hey, on this dip, you're going to buy triple levered on the IWN, which was the one that was heavily hit, and you're going to buy that, and you're going to, triple lever for the week. That was a brilliant freaking play. Brilliant freaking play. PPI came in stronger than expected. What does this mean? This kind of backs up that the CPI, which is a consumer price index, the rate cuts probably aren't coming. They definitely aren't coming for March after this number. They may be off for May. We may be back to June. So the market's going to maybe take a little bit of a step back today. What do you want to do? It's Friday. If you haven't listened to my podcast before, it's Friday. Friday, you should already have a plan for. And that plan is, hey, if I'm selling anything, I'm going to sell it into Friday, because I don't want to wait over the weekend. I don't want some bad news bringing down the all-time high market down to a 5% pullback on a Monday and not have taken my gains. That's what you're going to do. So understand what you're going to do, but Fridays is completely just for, selling. I'm not going to buy a triple levered ETF today, even if the market's down. I said in pre-market, I believe if we have a sell-off in the morning and then a rally in the afternoon, that's really good news. If we have a flat market in the morning and then a sell-off into the afternoon, I think you're hurting on Monday. But nobody knows what's going to happen. Nobody knows. Do you want to track Nancy Pelosi's trades? You can do that in TrendSpider. TrendSpider is a special going on. It is this weekend. TrendSpider. President's Day sale. You get a full year for $595. Yes, you can track insider sale, insider buys and sales. You can track Nancy Pelosi's trade. You don't have to subscribe to something else. This is the one platform that gets you absolutely everything. And it's on sale. Understand, you can use my link tree, sign up. I'll give you my algorithms. We'll go over all the algorithm stuff after this. But it is absolutely 100%. Everything is in this platform. I don't use half the stuff in this platform. Now here, Shay goes over. These are the things I believe are going to happen. This is his portfolio. And understand, I went over yesterday how you want to have a story for every stock that's in your portfolio. This is where I'm going to go over my portfolio. I'm literally logging into Fidelity on my phone right now. I am going down to all positions, and I'll give you mine. Here's Shay's. Apple, their Vision Pro will be as integral to our daily routines as the smartphone itself. And when I talk elevator pitch, okay? Elevator pitch, if you didn't know, it's a sales routine. And what you want to do is if you get in the elevator with a CEO or somebody important that you're trying to impress or do something, you have some type of 30-second to a minute presentation about that product, service, yourself, whatever it is, and you're going to pitch it. So in your portfolio, I want you to go down and do it this weekend. I want you to go down every stock that you have and do your elevator pitch. I am going to do that for you now. Here's Shay's. Apple, Palantir, Snow, Tesla, Crowd. Okay, Apple, we've gone over. AI. Amazon, we've gone over. AI. AMD, I love the chips. I want to own the number 1 and the number 2 chip. CRM, Salesforce, AI. DocuSign, it was going to be taken private. I don't want to own it anymore. I'm looking for a way out. Devon, I have exposure to the energy sector. I don't like this stock. I'm going to get out of it. Etsy, love the brand. I think it's beaten down overly. Google, AI. I'm afraid of their exposure to search and the fact that AI is taking over that, but it's still a company I want to own. IGM, that's an ETF. I want to own it. It's a tech thing, AI. Coca-Cola, it's a staple. I drink cola. Kill me. $60 is I think the top of it, but I'm not trimming it. I'm not selling it. It's something that I have to do. Mara, did you sell it under 30 and then buy it again for over 30 and then buy it again at 25 or 26 just yesterday? If you did, you're in a better place than I am because I held on to it. I didn't put my order in. It's trading at about 28 today. Meta, it's simple. It's the advertising. It is 100% just the average. They are printing money. MPLX, it's an energy sector stock where it puts off a 9% dividend and the price hasn't gone down. It hasn't been affected. Microsoft, AI. That's OpenAI. Netflix, it has not reached all-time highs. They are the king of streaming. They have quality program. I am not disconnecting my Netflix subscription. NVIDIA, that's clear. This is we'll go over it in a little bit, $1,200 stock. I'm going to add more to this one. Oxy, I want to get rid of it. I bought it for because of the exposure that Berkshire had to it. I thought they were going to be stewards. I'm not a huge fan of it. I'm not ready to wait it out with Buffett. Charlie Munger died. If Buffett dies, I don't know what they do with their Oxy, whether they sell it up. Palo Alto Networks just got an upgrade to 400. We'll go over a little bit. That's a cybersecurity stock, absolutely critical. Pepsi. I like Pepsi more than Coke. Coke was just a better buy at one point in time. Pepsi's a good one right now. Pinterest, I played them for earnings. I need to get rid of this one, but they have a Google and an Amazon partnership that probably pushes them up to 45. I don't want to get out of that one. PayPal, I'm looking to get out of it. I'm just looking for it to hit 60, and then I'll probably sell out. QCLN, I like the solar stocks. QQM and QQQ, ETFs, the NASDAQ 100, duh. Shopify, that's a $90 stock. I'm adding more here, added more under 80. SMCI, do I need to go over why I'm in SMCI? I think SMCI, I heard a debate yesterday, SMCI has a valuation that could go to $2,000 per share. Snowflake, same as Shea, they'll become the central hub for storing and processing, analyzing vast data services. I like this one to buy it anywhere under 200 and you sell it when it's over 200. Square, I need to get out of this one. Same thing. Target, I think this is a $170 stock. I still shop at Target every now and then. Uber, I'm adding this one under 80. I didn't add enough to it. Ulta, top beauty supply beauty company. I like it. I still think it has room to run. Wells Fargo, this is a company that's being rebounded. It's a $60 stock. Walmart, I shop at Walmart every freaking week for groceries. XLK, technology. XLY, consumer discretionary, 50% Tesla, 50% of this is Tesla and Amazon. There is your elevator pitch for every stock in my portfolio. Absolutely every stock in my portfolio. You don't have to ask what's in my portfolio. If you ever want to see what's in my portfolio, we can go to Savvy Trader, where I am, again, the number one portfolio with my trading portfolio. I am the number one portfolio with the trading portfolio. It does cost you money to see the trading portfolio. I don't think you need to get the trading portfolio. I think, in fact, you should just subscribe to the core portfolio. The core portfolio has stocks that I don't own in it, but I want to get into. These are 34 positions that you can get into these companies. And a lot of these companies, my parents own in theirs, and I manage their accounts. So we own those in their account. SMCI, Lilly, UNH. My dad still has a bit of UNH at 520. I think that one hits 525 and then you pull back under 500. Healthcare's been soaring. Roblox, this is one that I think goes back under 40 again. You can buy it. SPG, this is Simon Property Group. I think this is a great company that puts off a 5 or 6% dividend. Again, this is a free subscription to this portfolio. So that's the core portfolio. There is a trading portfolio. The trading portfolio, if you want to see, we can go to Discover. And you can see the best returns year to date. I'm number one, 50% year to date. 3 month, 59%. 1 month, I'm up 45%. 1 week, I'm up 15%. A lot of that, just so you know, is SMCI. A lot of this is covered in my newsletter. Subscribe to the newsletter for free. Seeking Alpha Premium. I do have a $50 off Seeking Alpha Premium. You can use my link tree. Comes to $189. I was playing around with this. If you go and you track these in a chart, App, Meta, Zscaler, F5, UiPath, GitLab, Team, and Dell, go and look at the charts. These are technology stocks' latest quant strong buys. The quant rating in Seeking Alpha Premium is unbelievable. It's $189 with my coupon. So in my mind, I think it pays it back. If you were in AppLovin and you put, a couple $1,000 into that, just say you put $2,000 into AppLovin, with the current pop on earnings, you're up. You've paid for it. And then I did Day Watch. What do you want to watch? Children's Place is up 81%. SoundHound up 66%. Children's Place is up because the Saudis put a bunch of money. I can't tell you the last time I was in a mall. But that's up 81%. And so you can trade on these huge names. This is why Seeking Alpha is such a good buy. Now, biggest movers of the day, Roku, Coinbase, Applied Materials, and more. I brought up Coinbase yesterday. I said there was a chance. I didn't feel good about it, but there was a chance that this one actually popped because Bitcoin was moving. And it did. It surged over 14%. Applied Materials jumped 12%. I missed this one. The one that I really missed, though, that I really wish I would have had on yesterday's show was the trading desk. I have a family friend who used to be the CFO for this company. And when Motley Fool decided, hey, it's in our thing, it shot up like 400% within a month when Motley Fool said it was good. Yeah, trading desk. I mean, it was obvious because, again, Meta said our ads are really good. Snap didn't say their ads were bad. They just, didn't have the user stuff. Pinterest didn't say their ads were bad. They just didn't have the user stuff. There were other issues with all of those social media. Well, the trading desk, what's interesting about the trading desk is that only 30% of the ad dollars of the potential ad dollars have moved over to streaming. And that's what the trading desk does. I like the trading desk. I really do. At this point, I don't know that I'm putting anything in, blah, blah, blah. What also was clear, Roku. Listen, Walmart bought Vizio or was in rumors to buy Vizio. Walmart has an ad business, a streaming ad business. Understand Roku? I'm not a fan. I'm watching on a Roku. I just don't like the product. So, and I said that yesterday. Dan Niles yesterday put out this, was on CNBC, talking about the Mag 7. I completely agree with him. Meta, Amazon, Microsoft, and NVIDIA, those are the four that you want to own. I've said it before, I am going to probably underperform the market this year because I'm so heavy into Apple. Apple is dragging me down. It's a huge position in my portfolio, but I do agree. I think of the three, of the seven, those are the three. Tesla, I think they just have some structural issues. I think there's some problems there. I don't think that you throw it out. I think you take it and you hold it until you're comfortable with it. But I think you can definitely trade around the Tesla. I hold it in XLY, so I do have some exposure to it. Google, they're susceptible to some of these AI companies coming out and stealing their search business. That's the issue. Meta, no problem, running on all cylinders. Amazon, their ad business is just starting. Microsoft, they got OpenAI. If you haven't watched those OpenAI videos, you are going to be blown away. NVIDIA, again, we'll go over it in a little bit. NVIDIA could be bigger than Apple based on some of the price targets that have come out. I don't think that that's likely. I don't think that that's realistic, but it could be. We don't know what's going to happen next week. Jensen Huang has been all over the stages on everything, talking about how every country needs to have sovereign AI. If every country needs to have sovereign AI, the chips they're going to buy are AMD, AMD and NVIDIA. That's why I hold both of them. They're not going to, NVIDIA can't create all of them. And you know who's doing it all? Taiwan Semi. And all three of those, AMD is not in the core portfolio. I just own it. NVIDIA and Taiwan Semi are in the core portfolio. So, watch this video. I think it's good. I'm right on there. The only caveat I would put to this is Apple. Because if Apple comes out with some of the rumored AI stuff that they have, if they are able to put a large language model on a device like an iPhone, and they are able to do that on the iPhone 16, and it comes out, and it's incredible. Imagine being able to have an iPhone 16, and you're at the Eiffel Tower, but it's a cloudy day, and you take a picture in front of the Eiffel Tower, and then all of a sudden, you just tell Siri to, hey, I want this on a sunny day, and it changes it to a sunny day. And it brightens your smile up because it understands your face. It has your face. But that's all on your local device. There's no privacy issue there because it's all on your local device. But that will require more memory than you currently have in the 13, 14, or 15. So it will have to be the 16. That may be what they announce. That may be a crazy step up, which drives iPhone integration, which drives more new users on the iPhone. Again, I think they have an opportunity, but that's an interesting one. One that we've talked about before, Elf, Motley Fool. My dad has a subscription to Motley Fool. I talk about, I'm not a fan. I do get in there every now and then. I don't like the Motley Fool. I think Seeking Alpha provides a significantly better experience. Elf, they're saying add it aggressively. Elf is a good cosmetics company. I have not gotten to Target to test their male skin moisturizer. Not my thing. But Elf, confirmation up at 174. If we go over to Seeking Alpha, let's go to Seeking Alpha and we'll look up Elf. I think the valuation is the only thing. Now, understand the valuation may be an F, but it's not a reason to not buy the stock. And the reason it's not a reason to not buy the stock is Elf has been having an F on valuation because they continue to grow in. They had their earnings on February 6th. There's no additional catalyst on this one, but you do have some confirmation. Now, as they continue to grow, the valuation comes down. So it makes more sense. And again, Motley Fool, Elf has a huge opportunity thanks to the brand that resonates deeply with customers. It's cheap cosmetics, and they're all over TikTok. A differentiated business model allows it to offer cheaper goods while still expanding margin. Moves outside of cosmetics could give Elf an even bigger addressable market. So read up on Elf. I think it's a good company. Sherry has been in this one all the time. I bought Ulta. I know nothing about cosmetics, but I bought Ulta. Industry leaders. It's been my thing is to just buy the industry leaders. Elf is one. Again, it's one that, hey, it was up and coming. I should have bought it at 70. Didn't buy it at 70. Stock Chart Art. He's a TrendSpider affiliate. I really like some of the charts that he has. He's got CVLT, Meta, AMD, Tesla, Palantir, and Elf. Again, Elf. He says these are reasonable, actionable trades for today. All stocks that are listed are primed for a breakout. Loop Capital just initiated coverage on NVIDIA, okay, with a buy rating and a $1,200 price target. Webbush ups their price target for Palo Alto Networks. These are two stocks that I personally own. NVIDIA, $1,200. That's a little bit extended for me. If I look at this one, and this is, this is 1,200. Oh, this is Evan. I put this in because the one below it, if NVIDIA were at 1,200 today, it would be larger than Apple. No one asked, but wondering NVIDIA would sit at a 1,151, surpass Apple in market cap. At $1,151, they would pass Apple in market cap. That's too crazy to think about. NVIDIA, it is up 1.36% today. I think if you put in a buy at about, I'd say 730, I think you'd get it today. I can't imagine this one sits up. 1.24%. SMCI has come down from 7% up to only 4% up. I would expect if that one gets under 1,000, add more to it. Everybody's asking me, when am I selling SMCI? When it shows some weakness. I mean, look at that. We went over this chart yesterday, SMCI. These are the days when it crossed that handle. These are the days when it crossed a handle. We have one more because you know what? It crossed a handle here, right here. So we're getting, my point on this one, there's two things that I see. First, that we're just in this straight line up. You don't want to get out on strength. You want to get out on weakness. With this large of a run, you can let if you want stop losses, put stop losses in. If you don't want stop losses, just wait for weakness. Wait for a day or two when you have weakness. You don't have weakness right now. And this one, again, I heard a debate that said they could go to 2,000. That's an interesting one. NVIDIA, same thing. Wait for weakness. You have no weakness right now. If you wanted to buy it today, I don't think there's any problem with buying it today. We're waiting for earnings on Wednesday. That could be a good swing up or down. I don't know which way. Unsure which way. I would guess it would be down. But, again, you thought it was going to be down, way down here. It didn't really move. The last time they blew out earnings, that was trading at about $500. And I said it before, if you can get this under 500, fantastic. If you can't, then you're going to miss out. But yeah, that's NVIDIA and that's SMCI. So NVIDIA could beat, thing. Palo Alto Networks, this is in, they brought their price target from 350 to 425. This one, I think it was up. Yeah, it's up just about 1%. Their actual price target, 425. If this one goes to 425, I mean, you've still got a big amount of stock movement in this if it goes to 425. Let's just chart where we are today, and we'll go to 425. 425, if you're at 425, that's about a 15% upside. Do you have 15% in this stock? I'm not selling it. I see a little bit of a button hook here. I see the MACD crossing down. I see earnings on February 20th. I think that's Tuesday. The day before NVIDIA. This one could, look at that earnings move here. So from the last earnings, you gapped down a little bit on the earnings last time, okay? And you were down there. Since the last earnings, we're up 51%. That's an enormous move for a stock. Are people spending? Remember, I played Fortinet. Fortinet's still in the 70s. Eli Lilly, which is in the core portfolio. This one's moving as well. It's up 1.5%. The stuff that's moving just continues to move. So it just continues to move. DraftKings had their earnings yesterday, defended by Wall Street Bulls. They lost money unexpectedly. I'm in DraftKings, a very small position in my parents' account. You're seeing it at 44. Right now, we opened up at 42, and you're seeing it at 44. It's up, down only 0.6%. It's coming back. The market seems to be coming back. This one in particular seems to be coming back. I think at some point in time, again, the catalyst is out of this one. I thought, I wrote in my notes, you could get this one for in the mid 30s. I still think there's some weakness in this. I think people are loading up on it. They lost money. That's what makes me a little bit nervous about that one. Earnings, DoorDash sucked. Dash just sucked. And I say sucked. It just ran too far into earnings. You're down 12%. Roku sucked. They just can't get out of their own way. I'm not a big fan of Roku. It's down. Trading Desk, like I said, that one was great. Coinbase. Coin just soared. Just absolutely soared. Coin is just one that, you're up at 191. You're up 15%. I said, hey, it could get back here to this 191. I said, that's a 13%. We're there. It's rejecting right there. If this chart doesn't tell you, you should subscribe to my newsletter to see where it goes. Look at how perfectly it rejects off that 191. That's the recent high back here from December, where all these ETFs were coming in, and then it was just a sell. The insiders were selling. If we go over here to FinViz and we look at coin, there were some big insider sales during this, and I can display this on TrendSpider. I just, again, I don't use a lot of that stuff. But look at this December and January. Look at these amounts. December 22nd, Chief People Officer, $20 million. The director in January, $15 million. Director, same director, another $13 million. Same director, another $12 million. So that's what was bringing this stock down. Now, aren't these people upset that they sold down here? During this downslide, because now you're at all-time highs. Aren't they upset? Read this thing on DraftKings. You can see that one. I know a lot of people are interested in dividends. This is an interesting one because this week's dividend included increased payouts from Sherwin-Williams, CSX, and declarations from Kraft Heinz and AbbVie. Meta and Target will be paying their ex-dividend dates in the upcoming weeks. This is a great, great dividend article. If you are into dividends, here's the dividend calendar, and you can look at it for next week. Again, these are great things to have in Seeking Alpha Premium. Okay, that's it. Shep from Spotify. Has NVIDIA given any early guidance? Personally, I'm up 200% on all of my SMCI, 80% on NVIDIA. Feel like NVIDIA reports shrinking AI biz. Any potential short-term losses post-earnings will be a blip. Yeah. I agree. Listen, I don't know if we're going to see 600 or 500 on NVIDIA again in the near term. But this one, in my mind, at 740, I think you just add to it, Shep. Am I selling? Again, sell on weakness. Don't get out just to, if you're losing sleep, like for instance, right here in January 31st, NVIDIA kind of had this little belly, little button hook. This line right here is the trend line that I drew on a long term on NVIDIA. We're up above it. We were below it here. So anything below this, see how it rejected off that line? This is what trend lines and TrendSpider can do for you. Yeah, all of these trading between 400 and 500. If this doesn't tell you to subscribe to my newsletter, I don't know what will. Andrew Lanzani, long term, will it rise when we get rate cuts? This is Realty Corporation. This is it's a REIT. Will it rise when rates get cut? I don't know. I mean, I'm not into REITs. I am not a REIT person. I hate REITs. I don't like this one. I mean, they give you a 3% dividend. It's the largest REIT out there. Year to date, you're down 9%. Great. You're getting a 3% dividend. You just lost 9% in a month during one of the strongest tech bull markets. Why would you be in this one? Unless you need income, don't get into something that pays you a dividend. Yes, it's beaten down. You'll have plenty of time to get back into this one when it makes a 10% move instead of trying to time this. Could be a rebound play, solid long-term successful REIT. If you're into REITs, it could be a rebound play. You saw it. It tried to rebound. That's when this note was in there. I don't like REITs. During a bull market, when you're going down like this, that's not a stock that I want to be in. I think Warren Buffett and Peter Lynch said, holding on to your losers and trimming your winners is like watering your weeds. So get rid of it. Again, if it's not working, get rid of it. We're in a bull market. Trenton from Spotify, open. If this one's open door, and I think this was one of the SPACs that Chamath brought up through the SPAC process. I mean, that chart it bodes okay. I mean, that run right there, the algorithm loses you 13%, but if you bought and held it for 2 years, you're down 70%. What makes you like this one? I mean, that, again, Trenton, you can tell me, hey, open, what do you think about it? It's a real estate service. Yeah, it's technology, but it's a real estate service. I mean, at the core, this is a real estate service. They are down 25% year to date. They're up 55% over 1 year. I mean, what do you like about it? I mean, that's what I would put to you. Do you like the insider selling here? All of this insider sales? Is that good news? Is the stock price over a long term good news? It's a positive moving 50-day. Tell me what you like about it. I mean, IBRX. Let's see what this one is. IBRX. Immunity Bio. It's a biotech company, I think. I know nothing about it. Chart looks okay. Probably going to fill this gap up here. It looks like it's tried to. Up to 603. Let's see long term. The algorithm loses you 16%. You lose 36% if you buy and hold. That doesn't seem promising to me for a long term. The 50 days starting to move positive, thankfully. But again, what makes you like that one? Disembodiment from the Reddit group. If you guys aren't part of the Reddit group, go to the Reddit group. You can get there through the link tree. Fastly, buy the dip or catch a falling knife. I like this company. I like Fastly. If we go over here to Fastly, I've owned this one in the past and I've traded it. It is a software application company. Year to date, it's down 8% over 1 year. It's up 21. Average target price 21. It's trading at $16. You're going to see some things come out. Yesterday, Craig Holman buy to hold with a $20 price target, and it's at 16. If you go over here to Seeking Alpha, we can look at it. I think their valuation. The problem that you have with their earnings, their valuation is it's just not in a great place right now. This is 3 reasons why I'm buying the drop. Rating upgrade. Fastly shares dropped almost 30% after the company disappointed with Q1. It was the outlook. Made massive progress in full year. Fastly's enterprise customer base is growing and free cash flow loss are narrowing. Shares are discounted by 30%. Again, I think this is a bull maybe talking his own book. Fastly crashed about 1/3 after the company submitted its earnings and especially its outlook for Q1 disappointed. I believe the market overreacted here because Fastly's outlook disappointed only marginally. Fastly missed Q1 consensus. They did miss marginally, but their outlook was the problem. And it's not yet cash flow positive. I can see a pathway for the company to become cash flow positive in the next 2 or 3 years. That's not something that, in my mind, over the next 2 or 3 years, you were hoping they were going to have a path to profitability. Right now, that's in question. And that's where I think, the difference is, if you have a path to profitability, you can buy an unprofitable company. But right now, if I were you, I'd probably trade it. But this, give it a couple of days. See where it shakes out. Again, it's a $20 price target. I think, in a good market, this one pumps back up to 20. But am I timing this at 16? No. I'd rather wait till it gets to 18 on the way up. And buy at 18 and sell at 20. Get 10% instead of 20%. Patience. That's the key for that. A lot of traders and investors don't understand. Twilio was a great example. There were a lot of people that got Alpha Picks. By the way, thank you to everybody who bought Alpha Picks. Huge response on that one. It is, just so you know, if we go over to Alpha Picks and you scroll down, it is $449 a year now. And that's based on their performance. They've made 105% versus 32%. And that's just through February 11th. That's up near 110%, I think, now. But the S&P has only made 32%. So it's a fantastic program. It is for a buy and hold person. It is not for a stock trader. But people wanted to get into Twilio before the earnings. And I put this note, I want a 6 handle, but I missed it. Therefore, I may have to wait until after earnings to buy. I don't want to buy it too soon. I said yesterday, I thought this was settling in at 62. Did I buy? No. I need to find strength in a stock. You don't want to try and time it for something. Yes, you can dollar cost average your way in. But in my mind, the first one and this one, again, it's not a profitable company. I like the company. I like the product. They had some things in earnings which concerns me, but their average target price is 73. You're trading at 60. So I like the upside to this one. You can see a couple of downgrades over the last couple of days. 66 and 61 are the most recent. January, Piper Sandler upgraded them to 82. It does concern me. You can read, if you don't have Seeking Alpha Premium, read The Motley Fool, why Twilio stock dropped today. It's down another 1.67. I'm looking for it to settle in. But just like Fastly, just like Twilio, you have to have some patience. And patience is the key. Patience is how you make people who trade 0-day options, those people don't have patience. They're trading 0-day options. They're gambling. And I'm not saying that, it's not a good strategy some people make a lot of money at that. Most people lose money like that. But you've got to decide which one you are. And for long-term, anybody that signed up for Alpha Picks, you shouldn't be gambling. And this isn't, again, buying before earnings. It's a little bit tricky, especially at that price. We knew it was going to go somewhere. You bet that it goes up. I have no problem with this getting back to 70. That's not my point. I have no problem with this getting back to 70. But disembodiment, I'd kind of wait on that one. Okay, scans, Netflix. Netflix, I think it's going to 700. The valuation would be crazy if it got to 700. But this one got another cross up. Probably wish that you would have bought here at 486. This doesn't have a catalyst going other than maybe they sign some live sports or do some gaming or do something. But April 16th is their next earnings. I wouldn't expect this to get to 700, but you still got 31% until you're high. So again, this chart in my newsletter, a great one. Bank of America got a cross up here, 33.92. I do think that we see under 30 on this one again. And we can look at a long term, but it's 33.89 is the price that the algorithm gets you in at. If you look at a weekly, I have the price. This $30, and I've been saying this for a long time. $30 is the buy. And it still remains. I think you're having problems getting over this 200-day. I don't think the 200-day turns negative, but I think we get something in the banking industry that takes this down probably to 32. I don't know that you're getting under 30 again, but that $30 still remains that price point for me. XLY. This is one in the core portfolio. This is 50%. 50% of this is Tesla and Amazon. I like this particular spider sector. There are tons of spider sectors. By the way, we have a lot of scans. Sign up for the newsletter. Look at the end of the newsletter, and there are scans. There are a ton of them today. PayPal, Square, Snap. Snap has a cross up, which is interesting because that's, I talk about any reaction in the market is an overreaction. This one has a cross up because it's been super down here. 1160. You're trading at 1117. It's down 3%. I don't know that it's a great buy. Again, remember, a part of the education in the newsletter, the education sector is kind of when I buy, and I'm kind of wrapping that one up into a good, nice little solid ball. But you can see the MACD super high, kind of trended down, overbought since October, but there's a little bit divergence there. So a little bit. You want to wait for confirmation. These Bollinger Bands are still too large for me to enter in, but $11.60 was the buy. It does have a MACD, does indicate that we might get a bullish move. It's Friday. I wouldn't buy anything on a Friday. That's just kind of my thing. Some low-cost ETFs, VSS, RSP, which is an equal weighted. XLF got a cross up. If you're into the financials, I predicted XLF would be the winner for this year. 3809 was a good one on January 19th, entered in. If you didn't get in, in December. In December, it was up here at about 3809 got you in. You're 3971, XLF, going for another move. Could be. XLI, industrials. This one got a cross up. These have just been on fire. XLI has been on fire. Again, this is a secondary move. Could be going for another leg higher. It's got confirmation, XLI. And finally, XLE, which I have not been a fan of. At some point in time, energy turns around. I just don't know when. But if you're in XLE, if you're looking at the algorithm, you got in January 23rd, and you've had a good move. Again, in a sector ETF, that move right there of 6% in 23 days, that's a fantastic move. A fantastic move. You're kind of just playing around here. Your MACD's crossing up. Your RSI is a little bit high. You're above the 200-day, so I'd put your stop in at 85. But if you want to get into the XLE, you can do that. If you want a triple levered ETF on the energy sector, I'm sure there's one out there. Okay. If you are going to sign up for TrendSpider, do it this weekend. We are off Monday. I may include something special on Monday in the newsletter, but understand TrendSpider. Get into it today. It's $595 for the year. You will make that back if you've got a large enough portfolio to trade. If you don't have a large enough portfolio to trade, don't think about spending $600 on this. Buy my newsletter for $120. Get Seeking Alpha Premium for $189. Something smaller. That will help you, but understand you do have to take your trading and your investing to the next level. When you have a large enough account, you do need those paid tools that will help you. And it doesn't help you in the fact that, oh my God, it's going to make me money. It helps you save time. Seeking Alpha Premium allows me to go to the central location, which is Seeking Alpha, and just look at everything that I need to look at. I could research on FinViz for a half hour. Or I could search on Seeking Alpha for like 10 minutes and go down a rabbit hole on Seeking Alpha. And Seeking Alpha actually gives me better ideas because it leads me to other stocks. FinViz doesn't lead me to other stocks and stuff like that. So, but TrendSpider and Seeking Alpha, those are the two. If you didn't get into Alpha Picks, it's not worth, for me, I would say, hold off for another sale. I don't think the $449 for the year, I think you should wait. I think there will be another sale. I don't think it's going to be $89, but I do think you could get down to a couple $100. So just wait. I'll do my best, but understand that $449. I think you're better off with Seeking Alpha Premium for $189. Personally, I'd rather do the research myself. The reason I said $89 for those folks to get into Alpha Picks was there's a lot of stocks in that list that I didn't know about. But $449, that's going to be a hard one to, unless you're putting a lot of money into the Alpha Picks portion. But again, those are the 3 things that I do sell. I do have a paid newsletter if you want. I would go and read this one, When to Sell Stocks. It's a perfect time. It's Friday. Go and read When to Sell Stocks and then sign up for my paid newsletter. I got to put this down in the education part. But if you have any questions, hit me up. Linktree here has all the socials up here. You got Facebook, you got Instagram, you've got Twitch, you've got Threads, you've got Blue Sky, which I don't have too many people on. You got my email address. You can email me directly. You've got every link that you want. The newsletter is here. Webull. I don't talk about it enough, how great the app in Webull is. I have, started out last year with Webull at $1,000. I'm at $46.19 right now. So I've done really, really well in that account. The app, it's just super. It took the place of my sports betting. That's essentially what it is. I didn't even bet on the Super Bowl. I was going to take Kansas City for $1,000. I couldn't set up my damn account in time on DraftKings, so they lost out on paying me $1,000 because that's what I was going to do. Visible, if you are on a phone plan that is more than $20 a month, use that link, get $20 off your first month. The plans, look at the plans. I am on this lower cost plan, which is $20 a month. $25 a month. They took the special away. It was $20 a month. It's now $25. I don't get this $45 one. If you want the premium data, if you want the expanded stuff, you can get $45 a month. I do the $25. It's on Verizon's network. So it's fantastic. If you want a 1 hour per month thing on Patreon, you can get it. I do have a founder's plan on my my paid newsletter, which gets you a one-on-one if you want to tip me a little bit. But that's a better option than that. Again, seeking alpha premiums there. If you're buying a Tesla like I am, I'm in the middle of it. If you want to follow on Savvy Trader is just, I love this platform. I think you should journal your trades, and I think you should sign up for Savvy Trader. I've got 2 portfolios. There's one that you can follow for $25 a month, one that's completely free. Now, the trading portfolio over 30 days is up 45%. The core portfolio, by the way, up 17% in 30 days. That is phenomenal. So let's take a look at these stocks in this core portfolio, because I can compare this and we can look at year to date. Let's just look at year to date. We'll compare it to QQQ, because QQQ is up 6%. The core portfolio is up 19%. Okay, that's year to date. Let's look at 3 month, because 3 month you're even doing better. 11% versus the core portfolio got you 23%. Yeah, 1 month. Look at that 1 month. You're up 17% in 1 month with the core portfolio. These are just stocks that are up 1 month, 17%. Again, you need to just pick these stocks all time. This goes back to June of last year, where I bought these stocks, and I've continued to add and remove stocks from this. But the core portfolio is up 30% versus the NASDAQ at 17%. You want these stocks in your portfolio. Pick and choose. This is kind of like Alpha Picks, but it's free. It's free. So if you want stocks, this is a great one to do. If you want the trading portfolio, you can subscribe to it. I mean, it's a great return, but I'm not doing a ton of ones. If we look over at Discover, you can see if I do 1 month, I've got 9 trades. 9 trades over 1 month, 45%. So I'm not doing, this guy has 371 trades. Over 1 month, 371 trades. And he's half the return that I have with 9 trades. Shea is up 21 trades. It's a lot. I trust Shea. He's up 13%. He may be beating me on a long-term basis, but who knows? It's a trading portfolio. Okay. I will talk to you guys Tuesday. Take care. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. and fears.